Hello, my name's Debs Taylor. I'm a trainer at Financial Edge. And before I became a trainer, I spent nearly 10 years working in investment banking.
Oh,
I'm
nice.
going to spend the next 15 minutes talking with you, and I'm going to put a particular focus on your technical skills. I want to find out a little bit more about your technical skills and how you approach some problem solving. Okay.
Okay, yeah. Mhm.
Um, Before we dive in with any questions, I just want to start off by saying if you're not sure on anything, then please just say that you're not sure. That's
Mhm.
absolutely fine. Also, it's really helpful as you're answering if you communicate your thought processes and don't just try to jump straight to an answer or a number. There will be some numbers later on. So
Mhm.
it's as much about how you approach your problem solving as sort of the destination, as it were. Does that make sense?
Yeah, for sure. That sounds good.
So what I'm going to ask you to do now is to look at some numbers on the screen. I'm going to share my screen very shortly, and I'm going to ask you to come up initially just with a methodology for
Mhm.
estimating the enterprise value of a company, and then we'll actually dive into the actual numbers. Okay.
Mhm.
So can you see my screen first of all?
Mhm. Yeah.
Okay. So we've got information on four companies on the screen: company
Mhm.
A, B, C, and D. For each company, we've been given their revenue and their EBIT. And for companies A, B, and D, we've been given their enterprise value. For each
Mhm.
company, we also have their growth rate. You'll see that
Mhm.
company C does not have an enterprise value. Can
Mhm.
you make some suggestions on how you might come up with an enterprise value for company C using the information just on the screen?
Yeah. So one thing that I would look at is the EBIT number, comparing that to the EV. And so it looks like these companies generally have pretty similar growth profiles, except company C would be on the higher end of growth. And so I'm seeing over here enterprise value for company A is 10 times of EBIT. And then for company B, you'd have 130 divided by 15. So that's about 8 times, 8.6 times multiple. And then for the company D, it's a enterprise value of 2,500 and EBIT of 200. And then so that's about a 12.5 times multiple. And so looking at the fact that there is a pretty strong growth there of 4%, I would put that on like maybe the higher end. So perhaps a 10 times multiple on the EBIT. So 70 times 10, maybe an enterprise value of 750. That would be one way I might just like quickly think about it.
Okay, fantastic. So you started to talk about the numbers as well, and that approach that you've suggested seems very sensible to me.